Genius Group, ticker GNS, has been volatile once again. The stock is just, a massive volatile stock recently, up 23% today. Now, what are some key levels we want to be paying attention to? So the first thing, and kind of, I would say the most important thing to note, is where are we currently sitting? So obviously we had this massive run up, we've obviously sold off, given back probably about 60-70% of that gains, and now we're back at around $1.10. Now what is this? What are these grey dashed lines? So what these are fair value. This is the 6-month level, this is the 1-year level. So between here is fair value between a 6-month and 1-year time frame. So normally what we do with this value is, if we're looking at investing in a stock, we normally want to be buying in this range or below. If we're looking to be long bias a stock, we're normally looking to, again, buy it below this value. So what this normally means then is, from how I trade as a reversal trader, if it's above this value, I'm then more short bias. So seeing that on GNS, and again, if you're a long bias trader, a trend trader, then what you can do is use these as targets. Again, same levels because they're just key, but whether you trade reversals or you trade or you're a long bias trader, you're straight into targets, you're going to want to be looking at the same levels. But if we break above this 112 and start pushing to the upside, we have resistances at 180 and 265. So again, for me as a reversal trader, can start looking short bias at these levels. And again, if you're a long bias trader looking to trade to targets, 180 and 265 will be some good targets. I would probably avoid the 180 if I'm a reversal trader like I am, just because we've kind of done this level recently. So I'm not as keen on it. But again, if you're a long bias trader, can definitely be a good area to either lock in profits or at least start to move stops. But again, if we go further, whether I'm a reversal trader or trend trader or long bias trader, looking to take profits or open that position coming into 265. Now, if we break that, just we'll cover some more resistances, just in case we kind of break that recent high. That will take us to 350 and 415. Now, again, the stock is very volatile. We only see that from the kind of last few weeks of performance. But again, if we zoom out, we look at the standard deviation, we just look at a 1-year chart, you can obviously see when we went down to a low of 30 cents, pushed back up to a high of $8. So the stock is volatile, it can make moves. So what this does mean is, if we are shorting these moves, like I would probably be doing, then obviously looking at the trade plan and buying calls to protect ourselves. Because again, if we are shorting the shares, we want protection, don't want max losses, we don't want to be blowing accounts off trades like this. Again, the probability that they pull back is really high, but in that off chance they run, or you don't have enough kind of capital to sustain a move against you, obviously we want those calls for protection. Just makes sense, and normally you can get them quite cheap. Like if we go 9 days out, you can even get a $1 call for, you're paying about $22 in premium, which isn't too bad to define your risk. So I'm paying attention to that. And again, it's a good thing as well. If you're a long bias trader or short squeeze trader, that can be a good thing to know, that this stock can easily run. So again, if you're not short bias, you're just trading with long, again, these can just be targets to either be adding at or taking in profits. And what we mean by taking profits is obviously the first time we come into them, reducing size, but then paying attention to, if we retest it, break above, come back to test it as a support, then that's where we could be looking at to add in if we're a long bias or trend trader.